You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. And also something absolutely insane is happening in the markets yet again, because why not? It's a day that ends in Y. Welcome to the Option Block. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, if you want to join the folks over here, get pro Q&As, awesome one earlier this week with our buddy Mr. Dr. Vix, who doesn't have a question about vol. We went deep earlier this week. We also, of course, have Options Oddities coming up. You get your own podcast feed. You get early access to stuff, giveaways, and a fun live stream or two there as well. TheOptionsinsider.com/pro is the place to go. Place where you want to be, probably. Days like today, days like yesterday, days like pretty much everyone coming at us, it seems like, in the markets. And joining us to kick off yet another wild Thursday episode of the show. First, beaming in, actually not from SIBO East, but from right down the street in SIBO proper. None other than the Flowmaster himself, Mr. Henry Schwartz from SIBO. Mr. Flowmaster, welcome to Chi-Town, sir.
Thank you, Mark. It's always nice to come visit. I got to see the Cubs this week, and they won. I got to go to the trading floor a couple times. I got to see insane market activity up close. So it's been a memorable visit, that's for sure.
Memorable indeed. And then also joining us as he is racing back to St. Charles proper HQ as well, none other than Uncle Mike Tusaw from St. Charles. Uncle Mike, welcome back to the show. To you as well, sir.
Always a pleasure to be here, especially when, we have a lot to talk about.
Yes, we do. So let's get to it, listeners. Time for the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's do it. Let's commence that dance that starts the way I have been starting almost every show, it seems like, for at least the last couple of weeks, which is if you don't like where these markets are, just wait 5 minutes. Yes, we are back in that mode. A nigh on historic mode. Definitely, I was saying last week, coming into the middle of the week before we got into the madness on Thursday and Friday, that we weren't really in unprecedented territory, but we are very much in that now. Of course, we have met or exceeded pretty much the swings and the downside moves we saw back in the wild days of 2020. Intraday ranges exceeding that of the flash crash back in 2010. And then on top of all of that, no one in modern markets, no one alive today, certainly the options industry as a whole, has never gone through a global trade war like this. So this is all unprecedented from that perspective. If you want to go back to real, global trade war times, you have to really go back to the 30s. Obviously, no options market back then. So very much a different environment, different context. And top of that, very different options market, doing a ton of paper these days, hitting new records. I'm sure the Flowmaster will regale all of us with that in a little bit. So we are in wild times, but getting back into the swings that have been catching everyone's attention out there. Of course, we've been vacillating a lot, doing a lot of whipping and sawing. And then yesterday, listeners, on Wednesday, the Bulls got their bit in their teeth. The moment a lot of people have been waiting for, I won't say capitulation, I won't say caving, I will just say maybe a little bit of a back step from the administration. A lot of people have been pushing for this 90-day hold, freeze, moratorium, call them what you will, on the tariffs, and Trump enacted that yesterday. A lot of folks pointing to the dust up in the bond market as really the thing that kind of pushed him over the edge. Other folks saying it was the comments from Jamie Dimon over there at Chase, whichever way you go, whatever pushed him over the edge. He did blink, and we are now back in that moratorium. That sent the markets into just not quite the mother of all rallies. But if you break it down, looking historically in the S&P, listeners, it is actually tied for number 8. The list I'm looking at here has it at a net up move of 9.52%. I'll have to go check to make sure. Did we close up 9.52%? Either way, that might have been the maximum intraday move, perhaps. But either way, that is exactly tied with April 20th of 1933. So apparently April is a wild time. And of course, we all know back in the 30s, not the same market that it is today. So if you're talking modern markets, the only real 2 days that beat it to the upside are October 28th of 2008, up 10.79%, and October 13th of 2008, up 11.58%. We all know that 2008, a pretty wild time. If you go back to March of 2020, the two big days there, they're only up, I put only in air quotes, up 9.29 and 9.38% respectively. So yesterday's up day beating the big rallies back in March of 2020. So we are in some rarefied air. All that, turn it on his head again today. Again, if you're Uncle Mike and his Facebook group celebrating yesterday, they had the champagne, they were popping bottles, they were wearing their party hats, and then today, throw them all in the garbage because we are right back down, listeners. Massive whipsaw yet again, rallying nearly 10% yesterday, giving up about 5% today. S&P, man, if you are slinging 0 days out there, you're either making a fortune or you've been carted off at this point. I don't know how much middle ground there is out there on the 0 day front right now. S&P off nearly 300 handles again today, over 5, about 5.15%. VIX at about a 49 as we're kicking off the show. That puts us down actually about 2 points, so almost unched from where we were on the Monday show, which is pretty wild. Dow off about 4.5%. NASDAQ off 6%. So just wild time. So giving back not quite all of what we gained yesterday, but a good chunk of it. Still north of 5,000. We'll see if that can hold during the session. Let's see, how low did we get? This got down to about 51.20 or so intraday here before bouncing. So we'll see if that level can hold or if we're just going to get sucked right back down. VIX, VIX cash at a over 20-point range just in the last 24 hours, listeners. Got up to about 52, which we might be kissing in a few moments again, and the low of 32. Just wild 20-point intraday range in VIX cash. You don't see that too often, listeners, which is, again, why we're getting into the certainly unprecedented when you factor in the trade war element, and definitely historic, just looking at the numbers I just broke down, where we rank in terms of the historic list, listeners. Vol of Vol, VVIX at a 165 when we kicked off the show. Puts it up 9 points from last show. That had a 50-point range just over the past 24 hours, up to 188 and a low of 138. 50-point range in Vol of Vol in just 24 hours. Absolutely wild. Same deal for UVIX, the levered VIX product we talk about a lot on Vol Views. Talk about a lot more tomorrow, I'm sure. Looks like about a 54-point range in the past 24 hours. Low of 47, high of 101. God knows where it's hanging out right now. Kind of hard to pin that one down. It is quite the beast when it's north of 70. So just absolutely wild times out there. Let's get out to all the people joining us today because I'm sure everyone wants to talk. Let's start with the Flowmaster because I could just tell he is champing at the bit. Mr. Flowmaster, since the last time we talked, I saw you tweeted out or put on LinkedIn or put somewhere that you were on the train going to a baseball game when we hit 100 million for the first time in the options market. We have since done much more than that, sir. So what's been lighting up your tape since the last time we chatted in these historic markets, sir?
Yeah, I don't even know what to say. I mean, we knew last week when we were talking that, you know, this was, we were going through something, right? And Friday was absolutely insane. 101 million contracts. You're exactly right. I got invited to the Mets opening day game by one of our broker partners. I was like, oh, I really need to go. And that started around 3. And I was like, I really don't want to miss this, though. And, you know, sure enough, while I was on the train, we blew through the prior record, which was 83.5 million contracts, right to 101 million. SPX traded over 6 million contracts. Okay, the prior record was only 4.8. So we didn't even stop at 5 million. We just kept going. It was, you know, kind of an astounding day. That's really, you know, kept up. I mean, I sent you a video. I was actually on the SIBO floor yesterday above the SPX pit, not at 1 o'clock when the news came out, but earlier in the morning. And for VIX being at 50, it was really quiet. And I was kind of like, wow, man, there's nothing going on. But, you know, because the participants know we're in kind of a weird binary kind of paradigm right now, right? Where any tweet from the president could send us up or down, say 5 or 10% in a blip. And that really, you know, that is absolutely what we saw yesterday. You know, I have my scans to look for kind of the biggest profitability in terms of all of the trades yesterday, and just poking around in some of the 0-day SPX, I found a contract that went from $1.60 at 115 to $266 by the end of the day. So, you know, 16,000% return. If you had bought a 10 lot of those, which, you know, I think any of us could have done, $1,500 in premium, right? It was worth about $67,000 at the end of the day. So, but I think what also is important is we're not hearing any reports of big disasters. You know, nobody seems to have been really caught in a bad position in this move. And even coming back today, we do see on the customer segment trading the 0-day, they have kind of taken a back seat because it's just so dicey out there. You know, it's kind of like I usually tell people that options are a little bit like a chainsaw. It's a power tool, and you really need to know what you're doing if you're going to be using them. I would say that 0-day options, when VIX is consistently at 50 something, and we're seeing, you know, moves in the 4 or 5% range regularly. I don't even know what the more dangerous power tool would be. Maybe it's like a chainsaw you can't turn off. So it really is unprecedented times. You know, this puts us on pace for 15 billion contracts. I'm just putting stats together for OIC, where I will get to hang out with you. then the numbers are huge. The notional value a day that we're seeing is around $3.6 trillion. That's bigger than the GDP of France. I looked up on ChatGPT. So amazing times, lots of opportunity, lots of danger, lots for us to talk about.
You mentioned, obviously, the records from last Friday. Obviously, we saw some wild markets yesterday and are shaping up for another wild one today. How are we looking on the volume fronts yesterday, and how are we trending today, sir?
Today looks like we're going to be in the kind of high 60 million. So, we're moving again. So 75 million. And yesterday was actually a little bit, considering how fast that move happened, 84.7 million contracts yesterday. So yesterday was the second highest of all time. Today, a little bit lower, 75. I think I've made up a new term, which is vol fatigue. It does get exhausting these days, where you're going to get, you kind of know you're going to get 3, 4, 5% moves. I think a lot of people, they don't really know what to do, and they're afraid of really getting run over if their timing is bad. And so I think some people are just kind of trading when they have to, but not necessarily because they want.
Yeah, just absolutely wild times out there, listeners. Speaking of this, we're going to crunch some numbers in a little bit about SPX and everything. So this is the question I've been wondering. We see the data out there, but I will put it out to you folks right now. Just went live a few seconds ago, another flash poll here. Are you still trading 0-day options, or are these markets just too wild for you? We'll check in a little bit to see what you folks are thinking. Let's go out to Uncle Mike now. Let's see what he's thinking, because yesterday I must have been the mother of all parties in St. Charles. Well, I mean, pretty much, you got to go back to 2008 for the most recent market days that beat it. So I don't believe St. Charles Wealth existed in 2008. So in the history of St. Charles Wealth, yesterday was the biggest Uncle Mike day you have experienced. So first off, what was the party like, Uncle Mike? And then B, on the flip side, how sad are you today, sir? And what else is catching your eye?
Oh, man, that's a mouthful. So yesterday was interesting. I was in a meeting with my people from Adaptive. We were just kind of going through some videos we wanted to make and things like that. And then I'm just looking at my streaming quotes. I'm like, whoa, wait a second. Hold on a second. And all of a sudden, right around almost exactly 24 hours ago, markets just went screaming to the upside. It was a lot of craziness happening, especially when we were up, we were down. We were I think we had a low of 49.48 yesterday, and then we finished pretty close to the highs of the day at 54.81, and 10% range of movement during the day. It's something you don't see every day, to say the least. And I think that Trump's putting a lot into this, and that this is something that he really seems to believe in, is that tariffs are not fair right now with where we are. This isn't like an issue like certain things to where you can dig up old tapes of him saying that he used to be pro-choice, now he's pro-life, and this, that, and the other. This is something to where, from everything that I've seen of it, he's believed in these tariffs for pretty much his whole adult life. And he's definitely doing what he believes in. And I think right now it's kind of a makeup time. And that I remember going into his first term, which shows how long this show's really been going on. It doesn't seem like that long ago. The joke was, and I don't know if the Flowmaster said it, but someone had said it, that not trying to be political, but no matter what you say, Donald Trump is not a single-digit VIX president. And that was totally the opposite in the early years of his first term. He was a single-digit VIX president, but with COVID and with what's happening now, we're kind of reverting to the mean of Donald Trump not being a single-digit VIX president, with the VIX at 50. So that's what's happening. And ultimately, what I'm looking at on here is that 2025 is definitely the year of the collar. I'm very happy that I've said that earlier in the year. And what I'm looking to do right now is, I'm not on the collars anyway. I've not taken any action yet. It's still too early for me to actually see something or on doing any action on it. But ultimately, there's going to come a point to where, do I want to pay a few pennies to get out of some of these covered calls? And we're not there yet. But at some stage, my answer to that's going to be yes. And then if this market does snap back, there's going to be a whole lot of grinning going on, mostly by me. And so I think that if you are in collars, that's something or covered calls for that matter, and you can get out of some of the short calls at this stage for a few pennies, it's something to consider taking a look at right now. Because of the movements with which we have, this thing can snap the opposite way, regardless of what the opposite way is in a heartbeat. So that's something that I'm looking at throughout everything. We're not getting a ton of movement in bonds. We're not getting a rally in bonds. We're not getting a big sell-off in bonds by comparison. And so I'm interested to see how the Fed's going to react to that, and if they're going to cave on the pressure of the president encouraging them to lower interest rates. And so we just don't have the buyers right now in the bond market. So I think it's going to be interesting to see how that plays out as well. And next week, we have a shortened week because of Good Friday. And I think it's going to be interesting to see the volatility that we get next week. The fact that we're going to have fewer trading days, and the market now needs to prepare for a 3-day weekend. 3-day weekends with a 50 VIX can be stressful for certain people, depending on what your positions are. So that's what I'm seeing right now. And yeah, that's it.
Well, let's see if that's it for the markets out here, listeners. Spoiler alert, it is not. It is a hot one. It is a spicy one. Let's start in VIX land. 902,000 contracts already on the tape. The ADV, 1.17 million. Spoiler alert, we're going to get there today. The big dog in VIX, 100,000 almost exactly of these SEP 80s. Now, those are definitely opening. But you see that, you have to wonder, usually that's against something else. And it does seem like in the past, it's been ratios 1/3, 1/4. And it seems like this one is a 1/4. It's the SEP 42 half 80 1/4. So they bought 25,000 of the 42 halves for $220, sold 100,000 or 4x of the 80 calls for 70 cents. So obviously doing that for a net credit of 60 cents. Interesting. You like that? Listen, it might be a fun flash poll to put out there as well. Would you be a buyer of that? You just want to stay away from that? I mean, that could look good. You get a lot of room to run. Also, we do know the price action on that far upside in VIX can be, I think the technical term is wonky. So if we do start blowing up to that strike or past it, you might actually be wearing it on some of those 80 calls for a little bit. Sounds crazy, I know, but the skew action out in some of those calls is just insane. So yeah, that's an interesting one. I need to look a little bit further at that, but far upside, kind of interesting. Being net short units in VIX, always dubious. Probably has something else against it, maybe some futures, something else in their back pocket. But either way, that's the big dog out there in VIX land today. Number 2, April doubles, 53,000 of those. Number 3, 36,000 of the April 25 puts. Number 4, 32,000 of the April 30 puts. And number 5, 27,000 of the April 22 calls. Interesting. Those could be the ones we talked about a while ago that they bought them for 77 cents. If they're selling them today, they held on for an interesting period out there. They're certainly getting a hell of a lot more than 77 cents for them, if that is the case. Again, we do not know. Going out to SPY, a banger, as you would expect. Almost 10 million contracts already. 9.81 million. The ADV is 11 million. Yeah, we're probably going to hit that by the end of the show, listeners. The S is the S hot, 2.32 million. That's pretty good. Maybe it's not as spicy as you would expect. Getting back to that, what Henry was talking about, people are starting to get braced for a little bit of vol out there. I just re-racked it. It's up to 2.38 million now. The ADV is 4.07 million. Probably going to get there, I would think. Let's look really quickly. Let's do the dance we've become accustomed to now. Top 20 in SPX. What do you think, listeners? Are we 20 for 20 again, or is this turmoil starting to spook some people off 0 day? Looks like we've got 1, we've got 2 options not expiring today in the top 20 of SPX. By the way, the most active SPX contract today, the par puts, the 5,000 puts going up about 28,000 times. Not exactly surprising, a very important psychological level. We've been vacillating around quite a bit of late, but the 2 non-expiring today options, we've got about 10,000 of the May 4,300 puts and about 10,000 as well of the May 43 half puts. Looks like we got maybe a bit of a put vertical, a far out of the money put vertical in May going up out there, listeners. So intriguing stuff. Are you done with 0 day? Let's check in really quickly on our flash poll and see what our audience has to say. We're asking you right now, are you still trading 0 day options, or are these markets just too wild? And right now, 83.3% of you say, no way, Jose, you're not touching them with the 10-foot pole. Only 16.7% say you're still slinging 0 day. So for a lot of you, it's too spicy. I get it. I mean, look what the Flow Masters is breaking down, 1,600% return. That sounds great. You can obviously also get run over very easily the other way in these markets. It is very much a crapshoot out there. So whatever you're doing, if possible, try to do it in a risk mitigated fashion. But for a lot of you, I get it. All right, let's keep rolling. Let's go out to small caps. We didn't have a chance to break down small caps at the top of the show. They've also been fairly active. I know our buddy, Mr. Dr. Vix, on our Pro Q&A on Tuesday. Spoiler alert, listeners, if you missed it. But he was saying he's shifting some of his attention to small caps right now. He thinks they might outperform in the near term compared to the SPX. Well, they're off 5.25% today. So not a great day for small caps, all things considered. Good day on the volume front, though, 1.76 million. The ADV, 1.63 million. So already exceeding a day's worth of volume. And the Qs getting up there as well, 4.27 million. The ADV is a stunning 5.04 million in the Qs. So that's getting rich, and we're already pretty much there. We'll be there probably by the end of the show. Out to single names we go, listeners. Is it a hot one? Is it a spicy one in single names? The answer is, yeah. That's about all I can say. Yeah, shrug the shoulders. It's not explosive. We're not even at 350,000 contracts. Although if I re-rack it right now, let's look really quickly. Maybe we could tack on a few extra. Yep, not really. 322. We tacked on 3,000 more. So 322 is what it costs you to break into the top 10 today, listeners. That gets you to maybe a name you wouldn't expect, but it has been popping on the radar a little more the last few sessions, which again, kind of interesting. All this macro madness going on, and we're seeing GameStop making its way into the top 10 yet again. GameStop off about half a buck, $25 is where it's trading. Actually, $24.95, just ticked below 25, off about nearly 2%. Had a range of 26.20 to the upside, 24.41 to the downside. But GameStop, either way, making it into the top 10. Who's out there slinging GameStop in a day when we're just moving like mad in vol, moving like mad in the indexes? You have a lot of choices out there for trading today, and clearly a lot of people are choosing GameStop. So an interesting choice in today's market. Coming in at number 10. Number 9, we've got the monster. Less monstrous today. Let's see how high did it get yesterday. It got up to almost 300 intraday, 299 and about a quarter. Today, it is back down about $24.50, trading 272.45, off about 8.25%. So it's at a low of 261.37 here. So obviously rallying over $10 from that low. But the monster looking decidedly less monstrous today. Number 9, 380 on the tape. Number 8, Intel. They giveth and they taketh away. Man, they were running away with this one yesterday, up to $21.50. And then right back down today, down a little over $2 or nearly 10%. To 19.41 today. The low on the day was 19.16, so we have rebounded about 25 cents from that low, but we'll see how long that holds. Intel number 8, 389. Are you folks out there slinging Intel? It does seem like it's very much a binary name. It's hot, it's on again. Up, it's cold, it's off again. It looks like it's in the latter phase right now, listeners. Number 7, Meta, 546.5, off about 39.25, nearly 7%. The low for the day, 535.30, so obviously bouncing off that low today. But yeah, they're coming for Meta. Let's see, yesterday got up to, looks like about 587 or so. So giving up about 41 handles on those highs yesterday. But even still, at this level we're at right now, 546, we're above where we were last Friday at 506. So still keeping a good chunk of that rally from yesterday. Yeah, it was 506 yesterday. So it rallied from 506 all the way up to about 588. And right back down to about 546 right now. Meta, number 7, 420 on the tape, listeners. Number 6, Palantir. This is another one, day that ends in Y. You know it's going somewhere. Today it's going down, nearly $6, about 5.75, a little over 6%. Trading 86.25. The low was 84.14, so obviously bouncing off their lows a little bit. Exactly 500,000 contracts on the tape as we're looking at it right now for the number 6 spot. Number 5, out to the Amazonians. 523 on the tape. 177.82, off about 13.25, nearly 7%. The low on the day, 175.85, so obviously bouncing a wee bit off that. Good for number 5. 523 on the tape, listeners. Number 4, keeping it in A tech names. It's AMDA, aka AMD, 86.40, off about 10.5 bucks, or nearly 11%. The low on the day, 85.06. So obviously bouncing off those lows there as well. Number 4, AMD, 526 on the tape. Number 3, man, we have the A tech strip is back, listeners. It's the fruit company. They giveth and they taketh away, taken away again. 185.63, off 13.25, about 5.25%. Let's see, the low on the day was 183, looks like, out there. So obviously popping a bit off the lows. Either way, good for 124. If we go back, yeah, I think it was last May. They were around this level, I believe, when they started initiating that buyback. So we're getting back to those levels again, if you were worried that you missed it, even though they did get as low this week as looks like about 172 out there in Apple as well. Either way, number 3, 1.25 million contracts on the tape. Number 2, yep, Tesla back in its usual spot, 243 and about a half, off nearly 29 bucks, 28.75, almost 11%. The low on the day was 239.33. I know some of our pro members have been dabbling in those Tesla catastrophe puts again. Yes, it's that season again, listeners. Those are back on the menu. Are you slinging Tesla out there? What are you up to? Either way, a lot of people are, to the tune of 2.3 million contracts. And the big dog, NVIDIA, 105.01, off 9.33, about 8.15%. Let's see, yesterday the bit was in the teeth. They got up to about 114 and change. And then today they sold off to as low as about 103 even before bouncing. They're at about 107 right now, still off about $7, or $7.33 on the day, about 6.5%. Good for 3.8 million. That also gets us to our question of the week, our actual question of the week right now, listeners, which is, as of Monday when we posted this poll, the NVIDIA December par puts, 100 puts, we're trading about $18. We said, you got to hold it to expiration. Gun to your head, are you a buyer or a seller of those puts? Well, we'll reveal the results in a little bit, listeners, but which way would you go? You want to sell those par puts? You want to get the stock put to you if it comes to that at about $82? Or are you going to buy those puts? You think NVIDIA's falling out of bed? Gun to your head. You got to hold it to expiration. Which would you rather do, listeners? As we look really quickly on the earnings front, not a lot going on. Everyone's really waiting for tomorrow. We're already back in it, listeners. If you wanted a respite from earnings, it's very short-lived. Tomorrow, we've got the financials again. Morgan, BlackRock, Wells Fargo, Morgan Stanley. I can't imagine, given the uncertainty on the horizon, that these numbers are going to be great or they're really going to give any sort of meaningful guidance. So I think maybe factor some of that into your calculations as well. How can you give any sort of meaningful guidance right now when there is literal tweet-by-tweet uncertainty in the market? But nonetheless, we shall hear some of that tomorrow. Be interesting to see what that does to the market. We'll be talking about that, obviously, on Vol Views. But now it's time to unleash the beast that is the Flow Master. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, time to get weird, time to get wild, time to unleash the Flow Master, who earlier in the show said he was speechless. We'll see if we can wake him up from his stupor now with a little bit of wild activity. Looks like he has enough words put together to find our first victim for the week. It is American Airlines, listeners, ticker symbol AAL. Trading $9.64 right now, off about $1.50 or about 13.25%. So they are coming for it today. Let's see, over the past few days, how's it done? It got as low as $8.61 last Friday, and they rallied it up all the way to about $11.12 yesterday. So it's been pretty wild week out there, as you would expect in American. Over the past year, it's been a little tumultuous as well. $13.41 a year ago, so they're off nearly $4, or about 28% on the year. They sold off to about 9.25 back in the big August 5th meltdown of last year. Then they rallied hard through the election into the start of the year. They got up to about $19.10 in mid-January, and then obviously have fallen off a cliff since then, almost $10 from that high, right back down to $9.65 right now. So the year started off promising, and then not so much. Mr. Flowmaster, sir, what caught your eye in the land of American Airlines today?
Yeah, so It's interesting, right? We are. I'm not surprised by your listeners who are just kind of staying out of the short dated stuff for a bit. It's obviously a very, very dangerous time to have, exposure that you can't control out there. But one other thing that's going on, with VIX at kind of these not all-time highs, but very, very, very elevated levels, we also are seeing very, very steep call skew. Okay, and this is kind of market wide. And so what's interesting is when you get market wide conditions, right? That's because people are they're not thinking a lot about what they're unloading or what they're worried about. They're just kind of basically trying to de-risk, which might make sense. There's a lot of chatter about recession risk, and the tide can change very quickly, as we can see. The trade that I noticed is in American Airlines. It's one of the most beaten up airline stocks. Everything is kind of beaten up nowadays, so you can kind of pick your name. They're all going to be basically around the low of their 52-week range. But in American Airlines, the option volume is relatively heavy. We're seeing sorry, I just lost it. About 170,000 contracts, and it's only 130. Which is about 50% above normal. It's kind of spread out in the calls and the puts. The first trade that I noticed really looked bullish to me. It was a buyer of 4,300 of the April 11 calls for 40 cents. Okay, these expire next Friday, right? Pretty good sized trade. Maybe looking for a short-term bounce, but then in some other trades appear to be put sellers to me. Also, like the April 10 half puts. There was a sweep seller there for 80 cents earlier. Both of these, the put seller was when stock was under $10. The call buyer stock was over $10, and right now it's at 970. But when vol is super high and put call skew is very steep, there's trades that make the most sense in terms of just kind of anticipating a reversion to the kind of a little bit more of a normal volatility shape. So when vol is super high, you kind of expect it to go down eventually. And when vol is when put call skew is super steep, you kind of expect it to flatten up a little bit. And so you want to be selling vol in general, and specifically kind of on that put side. And, with a stock like American Airlines, it's $10. It can't go below zero. Keep that in mind. And the skew is very, very steep. So I think that trying to pick your spots, things may get worse. There's nobody knows in terms of how things are going to go for the next month or maybe the next year or two. But, this one looks to me like somebody kind of hoping for a bounce. I don't know if I would play it as short term as next Friday, but maybe something like, a May recovery trade, looking at maybe, whatever downside strikes are out there. But I kind of like it. I think that, as scared as everybody is, I know we've given away kind of half of yesterday's super bounce, but I don't think that everything's going to completely fall apart. And I would like to put a little money to work, and doing it through selling some really steep puts, and even putting at least some of those proceeds into some calls, I think is an interesting and attractive way to do it.
Get paid to get in is what we always say out there, listeners. I'm sure a lot of you are drawing those lines in the sand right now where you want to get some underlyings put to you. We were talking about SVIX yesterday. Flowmaster's got some American Airlines. Are there any names you folks are nibbling at right now, selling some puts? I'm curious. Hit us up. Let us know. As we keep rolling, listeners, let's shift gears entirely, perhaps to a sector and a segment you weren't thinking about today. And if you've been listening to our Futures Rundown show, you would know this sector in general not been having the best year. It's one of the EMs. Uranium and lithium have both been kind of coming under fire of late this year. They've kind of just been outpaced by some other things that are outperforming them to the downside. Like, let's say Ether, for example, or OJ. A lot of things are having bad years out there that are eclipsing this, but nonetheless, the EMs not looking great. We're going to head out to lithium right now, in particular, Sigma Lithium Corp. Ticker symbol SGML, SGML. Trading $7.92 today, off about 70 cents or about 8% on the year. Let's see what they've been up to. As you might imagine, given what I just broke down, not been a great year. They were about 15.5 bucks last year, so they're off 760 or nearly 50% from their high, which was 1919 back in May of last year. Obviously, they're off even more. Their low is 706. So if you want a glass half full, they did bounce off that. Looks like maybe intraday this week. So they are up a bit off that, but nonetheless, just a rough year out there. What did we find out there? What did our Eye of Sauron find out there for us? Looks like somebody maybe betting on a little bit of reversal, and a fairly aggressive reversal out here in good old Sugamul. Looks like somebody came in this morning and said, hey, how are those May 10s looking? They got a dime at 25 cents when the stock was right around here, 783. And they said, you know what, I will pay 25 cents, good sir, 3,000 times exactly. So that may sound like a hefty lift in the stock, and it certainly is. But just a few weeks ago in late March, the stock was 11.5 bucks. So I guess if you're thinking, I mean, this is not a name I watch that often, I need to go look and see when their earnings are. Maybe there are some other catalysts here in the near term that might make this trade even more interesting. It is obviously short sale restricted, so that might add a little bit of the old squeeze fun to the upside as well. But either way, May 10s, it seems like a hefty lift, but not spooking somebody off. Mr. Flowmaster, what are your thoughts on somebody reaching for some upside in good old Sigma Lithium Corp, sir?
I kind of like that trade. I mean, a lot of the story with this trade war that's going on, has to do with some of the strategic minerals and rare earth metals and this and that. And so I think there's going to be a lot of focus on kind of the less common mineral names. Lithium obviously is a element that people know about. I don't hate it. I mean, with the stock, stock's got to bounce, more than 20% just to get to the break-even point. But, you have a month and a half. So I'm going to try to hit up a friend on the box floor where that traded and just triple check that was indeed a buyer, because they still seem to be offered at a quarter, even with the stock a couple pennies higher. So I was just going to double check. You
like it. Mr. Flowmaster down for a little bit of lithium upside. There you go. We're luring the Flowmaster to the dark side of lithium upside, listeners. You like those? You like maybe a little bit of a quarter for, you're getting a month and a week. Is that enough duration for a quarter? I don't know. It's up to you. Stock's got to run, though. Got to run a couple of handles to make those bad boys start paying off. But interesting stuff. Speaking of interesting, let's flip gears yet again, listeners. Let's go out to the land of pharmaceuticals, in particular, BioMarin Pharma, ticker symbol BMRN. I do believe this is a newcomer. This is a biotech out of California. Looks like they're in enzyme replacement therapies. Ticker symbol BMRN, trading 56.11, off about 332, or about nearly 6% today. So not a great day. On the year, also, pretty terrible year. No real ways to mince words about this. They were $90.25 a year ago, so they're off about 34 bucks, or nearly 38%. Their high was $94.85. That came back in August of last year, so they had a decent first half of the year. They actually were up through August. Then all the madness of August happened. They started selling off. They got to 70 bucks in September, and they tried to rally it again recently. Got up to 72 in March 27th, before falling out of bed again. So it's been pretty much a garbage year out here in good old BioMarin. But maybe, listeners, somebody has decided to draw the proverbial line in the sand using puts, saying this far and no farther. And if it goes this far, I shall buy some. In particular, this morning, looks like we had, and this is a pretty wide market, so I might have to read into the tea leaves here a little bit, but they came out and said Jan 42 half puts, so not the most daring of puts. The stock was 56.5 at the time, so substantially out of the money puts, but they're getting some duration as well, going all the way out to January. They said, how are they? They got nearly $1.50 wide market. They got $1.40 at 285. They said, I will trade them for $1.95, which looks like I'll have to go dig into subsequent executions. Maybe we can read a little bit more into those tea leaves with the tighter market. It looks like they might have sold these bad boys. If you're buying the 42 half puts, that's looking pretty rough as well. That is about a 42.5 vol, so I'll leave that up to you if you think that's worth selling or buying. There are going to be earnings, obviously, between now and Jan expiration. The next announcement is on April 24th, so they're coming up in a couple of weeks, so that might set us on the road to figuring out whether these puts are a good sale or not. Mr. Flowmaster, what are your thoughts on these fairly wide puts here in BioMarin Pharmaceuticals, sir?
Yeah, this is one of the negative side effects of kind of crazy markets is we do see the quotes blow out. I mean, this is not the most active name to begin with. Average daily volume is only 1,100 contracts. It only trades 1.8 million shares a day. My guess is actually that this might have been a put buyer. But I agree with we're looking at the same data. It's a little tricky. I mean, in my experience, the option information you get out of biotechs in general is actually very good. It's one of the places where I think you have some very sophisticated or well-informed traders using options, right? For all the great features that you get with an option. So I'd be a little bit nervous here if it's a buyer. This one's there's not even anybody I can call to double check on this one because it traded on another exchange and it's electronic. But I'd be a little wary on BioMarin.
Yeah, well, that's definitely one that makes your hairs on the back of your neck stand up. Either way, it's kind of dubious. What are your thoughts, listener? Would you rather buy or would you rather sell those? Speaking of your thoughts, let's keep rolling some of those right now. A little bit of the old Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let's catch you up on some of our fun little flash polls that are going up right now. You folks want to trade 0-day even less right now. We posted this at the start of the show, and right now 88.2% of you are saying, no way, Jose, you're not touching any 0-day premium right now. Only 11.8% say you're still trading it out there. That'll be live through the podcast. You folks can vote later on as well. But yeah, reasonable to be a little spooked about that right now. That's definitely no shade on you folks who are voting that way. In terms of our NVIDIA, Mr. Uncle Mike, I need your thoughts on this one, sir. Dece par puts trading around $18 when we posted this. Gun to your head, sir. You got to hold them to expiration. Are you a buyer or a seller of those NVIDIA Dece par puts? And more importantly, which way do you think our audience is going?
I would actually be a seller of it because if NVIDIA does take a dip down to roughly the $80 level, I don't think I would have a problem owning it. So yeah, I mean, I'm in NVIDIA right now in our collars, and so like I said, thank the Lord for put options. But I think I'd be a seller, and I think the audience would be too if the gun was to the head.
Mr. Flowmaster, which way you going? Which way is our audience going? NVIDIA Dece par puts for $18, sir.
I think selling them. I think you get a pretty good amount of room there before you start to get yourself in too much trouble.
You think our audience is going that way as well?
Yeah, I think our audience likes to take some risk.
They like to sell some puts, and that is the case. Both of you have your fingers clearly on the pulse of the audience. 58.7% of you right now want to sell those. 27% want to buy them. 14.3% say you're just staying away from NVIDIA right now. Speaking of your thoughts on these wild markets, listeners, we did ask you yesterday, or I think actually this was on the Monday show. Yeah, we asked you, does this rally have legs or is it just a dead cat bounce? This was on Monday before we had the big rally yesterday. You folks faded it. Nearly 70% say you're staying short or staying in cash. Of course, yesterday we saw not quite the mother of all rallies, but certainly top 8. So we thought we'd ask you that same question again today. What are you feeling out there right now? Was it the mother of all dead cat bounces? Or are you buying this dip today? Mr. Uncle Mike, same question for you. Was yesterday a dead cat bounce and this sell-off is the real move? Or is it time to buy this dip, sir?
Well, I mean, seeing as I've been telling people to buy the dip, I think that if I wasn't fully vested, I would be buying more of this. And I'm a buyer. I can't resist this much of a pullback, Mark. You know that.
That is the case. Mr. Flowmaster, same question for you, sir. Is it a dead cat bounce yesterday, or are you buying the dip today, sir?
I am buying the dip today. I would not carefully, but I feel like everybody's trying to decide if there's any reason behind the madness that we're seeing. I think the answer is still possibly, but I still have faith that we'll kind of shake that in the shakeout. We will be okay, and so I'd be putting a little bit of money to work when we get these solid sell-offs.
Our audience still fading 70% right now, saying that was a dead cat bounce yesterday. You're not touching this sell-off. And 30% say you want to buy the dip as we want to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, as we're coming into the end of the show here, we're seeing, looks like the sell-off mitigating a little bit. S&P off about 4%, NASDAQ off about 4 3/4%, Dow off about 3.15%, and the VIX cash at about 46.60. So mitigating ever so slightly, but then again, just wait 5 minutes if you don't like that, listeners. And Mr. Flowmaster, we have a lot to keep an eye on. What are you keeping an eye on until your next appearance next week?
Yeah, I love the fact that when we're only down 3%, it feels like a perfectly okay day.
It's normal.
I will be watching the earnings that, even though I think you're right, I don't know what kind of information we're going to get out of them. That's definitely not what everybody's focused on right now, but they still matter. We do have, and then your Tesla earnings are not too far off. That's an interesting story stock with everything that's going on with Doge. And then the other thing I'm actually going to refresh a data set I have that shows the 0-day straddle price and terminal value in SPX going back a few weeks, because I believe over the last 5, as we got into this crazy run, that straddle has been a big winner for anybody that was willing to buy it. Now, and if you don't want to bite off a $100 plus straddle in SPX, you can do a mini version in XSP. So I'll have some data on that.
All right, looking forward to that. Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on till the Monday episode of OB?
I mean, what's not to keep an eye on? For the most part, what is the president saying? What's he doing? He's moving this market one way or another, for better or for worse. Watching that, and then just continuing to watch not only the markets or the stocks, but watching precious metals, which silver is eerily quiet today, and watching to see if we get some buyers in the bond market.
Yes, we talked a bit about silver on the futures rundown yesterday. Check that out if you are so inclined. That music means we've come to the end of our journey today, but don't worry if you're hanging out in the live or you're listening after the fact. We'll be back in a little bit to talk you off the ledge with our good buddy Dan the Man Gramza. I'm sure he'll have a thing or two to say about these markets, so stay tuned for Twifo coming up in a little bit. But before we get there, Mr. Flowmaster, sir, where should folks go if they want to crunch all this data, look at 0-day straddles, and everything else we're talking about on the show today, sir?
You can always head on over to cboe.com/RMA. That's where we have our platforms and data sets on display. We're happy to set up trials and help people see what we can see in the market.
cboe.com/RMA. If ever there was a time to check it out, listeners, now is the time. And if ever there was a time to call Uncle Mike, now is the time. Uncle Mike, sure, how should they do that?
Head to stcharleswealth.com. Sign up for a phone call with me on the website. Would love to have a conversation with any of our clients just to talk about what we're doing in these not boring times.
Not boring indeed. Hit them up over there, stcharleswealth.com. We got to get on out of here. Back again in a little bit with Twifo and Dan the Man. Back again tomorrow with Dr. Vix and a whole mess of all. Should be a wild time. Join us for that. After that, exclusively for the pro folks, we come back one final time to wrap up the week on options oddities. It's been wild. Going to be a wild one again this week. Check it out on the pro if you're interested. theoptionsinsider.com/pro. Then we're back again on Monday. Another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.